In this video, we are going to talk about dividend stocks to buy in 2022. So before starting this video, please like this video and subscribe to this channel for our future updates. This summer's performance of the stock market has gone from bad to worse, with the month of June beginning with a string of significant price drops. As the Federal Reserve takes forceful measures in an attempt to curb the spiraling pace of inflation, many investors are pulling their money out of the market. These significant market drops, on the other hand, might provide patient investors with great entry points for longer-term investments. However, given the current state of the market, it is important to use greater discretion. Strong dividend-paying companies can be wonderful investments since they guarantee a constant income. In light of the challenging conditions currently prevailing in the industry, this comes as a much-appreciated respite. In light of this, we have compiled a list of some of the finest dividend stocks to purchase for the remainder of 2022, each of which yields at least 3%. Exxon Mobil Corporation, ticker XOM. Energy is one of the few market sectors that still has positive technical momentum, making it a particularly attractive investment. The prices of oil and natural gas itself are responsible for a significant portion of this phenomenon. Both are very close to reaching their 10-year highs. The rise in the price of oil to $120 per barrel has been particularly amazing, taking into account the growing concerns regarding the possibility of a recession, which would have an adverse effect on demand for oil. Whatever the case may be, Exxon Mobil continues to be a reliable dividend holding. Even in 2020, when many of its competitors were forced to reduce their dividend payments, the integrated oil giant continued to pay it. And today, as a result of the industry's recovery, it is raking in profits that have never been seen before. Suncor Energy Incorporated, SU. Suncor possesses a significant number of the same advantageous characteristics as Exxon. Suncor's fortunes aren't only dependent on the cost of crude oil because, for instance, the company controls a significant amount of assets in the oil refining and distribution industries. And to that end, refining margins have moved to elevated levels this year, adding to Suncor's operations' overall profitability. Another significant advantage that Suncor enjoys is its dominant market position in the oil sands of Canada. Once they are operational, oil sands are long-lived assets that can continue to produce at a steady rate for several decades with little to no noticeable decrease. In a world in which governments and ESG investors have placed many constraints on new oil production assets, Suncor's current production that is already in operation stands out as a big advantage over other companies in the industry. Through the middle of June, investors in Suncor shares had earned a total return of 65% since the beginning of the year. Despite this, they are only trading at a multiple of 7 times their anticipated earnings. There is a return of 3.8% from Suncor. Citigroup Incorporated, C. Citigroup is one of the largest banks in the United States. Citigroup is one of the most varied global financial corporations out there due to its large business that spans investment banking, retail banking, and overseas activities. It is also turning into a well-liked value stock pick at this point. This is due to the fact that during the most recent quarter, Warren Buffett's Berkshire Hathaway Incorporated, BRK.A, purchased a whopping 56 million shares of Citigroup stock. As a result of Berkshire Hathaway investing over $3 billion in Citigroup, it is clear that Warren Buffett supports the business turnaround efforts being undertaken by Citigroup. The fact that Buffett has a lengthy and successful track record of investing within the American banking business lends significant weight to the vote of confidence that Buffett has provided. The projected earnings multiple of the stock is approximately 7, and it offers a dividend yield of 4.5%. Pinnacle West Capital Corporation, PNW. During the wild ride that the market has been on this year, utility stocks have shown to be one of the most reliable safe harbors. Nevertheless, even the safe havens are being affected by the crisis. Pinnacle West Capital, an Arizona utility firm, has seen a recent decline in its share price of 10%, reaching this figure. That is a bold step for an organization like a power provider, which is often very conservative. The Arizona Public Service Company and Bright Canyon Energy are both businesses that are run by Pinnacle West. Over the course of the past year, the company has seen a number of temporary setbacks, some of which include rate battles with local regulators and even analyst downgrades. However, the longer-term picture should be bright for Pinnacle West, as Arizona has been one of the fastest-growing states in the country thanks to its favorable weather and taxation policies. The longer-term picture should be bright for Pinnacle West because Arizona has been one of the fastest-growing states in the country. Pinnacle West should be set to beat its competitors given that population growth is one of the key drivers of utility performance. In the meantime, the dividend yield on the shares is a tasty 4.8%. Banco Latinoamericano de Comercio Exterior S.A., BLX. Banco Latinoamericano de Comercio Exterior, or Bladex for short, is a unique bank. It is a commercial bank that focuses primarily on providing financing for short-term loans connected to trade. Consider the possibility of providing consumers in the industrial, shipping, and similar sectors with short-term loans. The central headquarters of the bank are located in Panama, which makes sense given that the country is a free trade zone and is home to the Panama Canal. The bank operates, in large part, to encourage the unrestricted movement of commercial products throughout Latin America, and its board of directors is full of different people who are in charge of the central banks in different countries in the region. The housing market and other traditional banking activity do not affect Bladex in any way. Rather, it may attain growth as a result of the strengthening of economies of Latin American countries. The significant increases in the prices of copper, oil, and agricultural goods, which are primary exports for Latin American countries, make this an extremely possible occurrence. BLX provides a 7.1% dividend. Life Storage Incorporated, LSI. During periods of inflation, real estate investment trusts, sometimes known as REITs, can be profitable investments. This is especially true for business owners of self-storage facilities like Life Storage. In most cases, storage spaces are rented out on a month-to-month basis. As a result, owners have the ability to immediately increase costs in response to shifting market conditions. In addition, these types of companies often do not need a large number of employees to function, which means that the effect of inflation on labor expenses will be minimal. In order to finance their real estate holdings, REITs typically have substantial amounts of long-term debt listed on their balance sheets. During an extended period of high inflation, such as the one that is happening right now, the value of those obligations is eroded away to a considerable extent by inflation. Because of this, a positive feedback loop is created in which the value of REITs obligations decreases while the value of the rent that storage operators receive increases as a result of their increased prices. The price of Life Storage shares has dropped to 16 times the company's operating cash flow, and the dividend yield is 3.9%. Washington Trust Bancorp Incorporated, WASH. For reasons that are easy to comprehend, investors frequently choose large banks like Citigroup for their dividends. Nevertheless, in many instances, smaller regional banks are frequently more stable than the nation's titanic financial institutions. For instance, Washington Trust Bancorp, situated in Rhode Island, was established in the year 1800 in order to provide services to mills that were emerging along the Pawcatuck River. Even though there have been significant shifts in the economy since then, Washington Trust is still going strong. It has maintained its profitability and continued to pay dividends during the economic downturn that occurred throughout the past decade. It has been paying dividends for more than a century. The bank's tendency toward conservatism has been to its advantage and has set it up for decades of continued prosperity in the future. In point of fact, Washington Trust was able to take market share in the local area throughout the financial crisis that occurred in 2008 because it continued to have sufficient reserves to lend while the larger banks were forced to scale back their operations. Shares of Washington Trust presently trade at a multiple of 12 times the company's projected forward earnings and offer a good yield of 4.5%. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.